And they are already offering some of their channels to the customers, and they don't want to make their own, to create their own competition. Right now, everybody has e-banking portals. They offer their products. If they are in a good position, they compare with competition. They say that they have the lowest prices on the market. They don't want to create a portal which will actually, if they are not the lowest one, and say, okay, look, we are probably one of the most expensive ones. That's like shooting in their own foot. So that, among other things, is something what banks are reluctant to provide access to those accounts. And what the fintechs do in those kind of situations, they provide a direct access. Direct access is actually the screen scraping that is going on right now for, let's say, more than 10 years. It started in the USA, and since everybody is doing it, but there is no, let's say, a legal form to stop it, everybody just continues to do that. It's not illegal, but it's not legal. We are asking our end customers to provide us with their usernames and passwords. Okay, we might present as good guys, and we will do exactly what we say we are going to do with those credentials, but we are not sure that every company is actually going to do that. Right now, there exists some, let's say, local regulative that will compare those and audit those entities which are doing direct taxes, but that does not exist on the full soil of European Union. It is not secure because we are providing those credentials in plain text, and API access is better when somebody else takes care of this security and we get granted access. Since we touched the security, security was not mandated by any regulative body in the EU, and it is probably not only case by case by country, it's case by case per bank. Everybody does his own security and promotes that in his domain, in his at his court with his customers. So they didn't stop users to provide plain text credentials for direct access. Some of the banks tried using Java to protect their sites from being scrapped. But at the point, or Flash, but at the point when browsers stopped supporting Java and they stopped supporting, or they are stopping the support of Flash, nobody actually prevents the third-party providers, which is the new term under PSD2, to get those plain text and use them. So data was stored in this database, and if there was a hack like recently we are witnesses, or we have more internet access and we get more information, if somebody hacks into a system like that, they can actually steal our credentials. And it's, again, case by case per bank. Some of the banks provide two-factor authentication even on the startup, and just to log into e-banking. Other banks provide it later in the process when executing a transaction, and others don't provide it at all. So that's the current situation. It's going to change. And what is the impact of all of this that we have here? We have created payment service providers which are starting a monopoly on the market. There are very few that have direct access. They have negotiated with banks, and they are working just on a local level. There are security flaws when if the TPP right now does not guarantee anything, and if somebody gets those credentials, they will be blamed, but they will say that they have at the very beginning they give the user the terms and conditions under which they say that they don't hold any liability, that they are using actually the banking system. And at the end, the most valuable for the customers is that we have expensive banking. Yeah, I know. I know that that's one of the. It's Sweden and Netherlands that have similar system, and it's one of the reasons that probably influenced the EU, and one of the systems that influenced me into looking at the PSD furthermore, because I wanted to replicate something that you have here, the Swiss solution, but not just a local solution that will actually get those information. I wanted to be, let's say, a global thing for whole Europe. So actually, that bank ID is the exact thing what PSD2 stands for. It's very local, and it depends on cooperation between banks. That's something that you have here, but that's not the case across Europe. So in general, there are, let's say, banks that cooperate between each other because they are actually they have the same ownership structure, and only in that case they cooperate. You will see like consortiums of 10 or 15 banks, but you will not see a group of 7 competitors that will actually get together and create something like bank ID. Everybody wants to protect his own market, his own domain. Exactly, exactly. That means that each country will need to have a governing body that will say, okay, we are issuing bank IDs and we are cooperating and we are using the same structure. Yeah, that is correct, and we need it across Europe. But the problem here is that if somebody as a fintech would like to use that service, he will have to pay for that service. Under what is in PSD2, banks will have to give that for free. So everybody will need to provide access for free. Not like Bank ID does. It provides access, it authenticates, but the third-party provider will pay some volume amount, or I don't know, per call. Yes, yes, yeah, more than free. Yeah, exactly. So it means it's a step forward, but there is a slight difference. It's going to be free, but everybody will have the responsibility to create his own security and provide it. So it's not going to be centralized like it is in Sweden with Bank ID. So we don't know which model is better, because in the case when you get the free beer, but you have all of these different brands of beer, you will get drunk after the third beer, and as a TPP you won't want to continue with the fourth beer. Here you have one typical beer, let's say, I don't know Swedish beers, but let's try with Danish. Sorry? Falcon. Okay, so we take Falcon or Cirrus, and we charge for it. You get a lot of things. You can drink as much as you want. You won't get stunned after the third glass. But the problem here is that you are paying for that. or somebody is paying. The person who is bringing you the beer will need to pay. You will get it for free, but the middleman, the one who organizes the party, will need to pay. Yeah. Yeah. So mobile pay is a different story because it's mainly mandated by one bank, but Danske Bank has made a great deal by imposing that before it makes like countrywide and relating all the customers towards it, so it gained a lot of in the retail market. So it was a great, let's say, forward thinking from their side. So it's great forward thinking from Sweden to organize everybody into one central system and to get the authentication and the security at one place, and then you can create how much you like fintech companies and push good ideas on the market, or you can have one good idea and attract everybody to that idea because you have a large group of companies and a large group of retail domain, and you can create your monopoly there. What PSD2 is going to create additional mess. It's going to offer something for free, but it's going to offer the functionality, the same functionality as we have in the e-banking. It's not going to be, actually, it's going to be as wide in possibilities as the, let's say, bank makes it. What EU says is that you will need to provide at least some simple steps, yes, no answers of these API calls. You don't need to provide something plus, but you also need to provide everything, every functionality that you provide through your e-banking. The security standard, which mainly says what you should not do, not what you should do and how to do it, is still changing. We are adapting our solutions almost monthly because of that. And for the third-party provider, the fintech company that needs to connect to these systems, they will need to adapt to every bank individual. So that's what we are saying. We have different brands of beer, but we will have to try each other and to go to each bar separately. What is the problem? The main problem for, let's say, banks and existing entities, they will have to redesign the architecture. We know that a lot of banks, they are driven by profit. They are not driven. Okay, so I'm generalizing for Europe. That's actually not the case in the Nordic countries. But they are driven by profit, not by invention, and they usually stay a lot behind the technology. We have had cases when our customers are still working with some COBOL systems. I don't know how technical you are, but that's technology which was mainstream in the 70s. So that's how old their core systems are. And if they are going to change this for API system, that's going to cost a lot, and they will have to change it from scratch. Those systems have, let's say, workarounds, created workarounds to provide the current security. They need to provide additional hardware for supporting these APIs. They have a strict deadline, which is, as we saw, not so strict. It changed from January to case by case by country. Sweden, I think it's May 2018, but it's still going to be 2018 until it's again changed to maybe 2019. The biggest problem for everybody is that resources are scarce and timelines are short. What will be the impact from this change? The banks will need to get compliant and to implement this. The current financial service will need to comply with the security, abandon the current direct access, the screen scraping. They will have some period of adoption, but they will need to change from the existing model into the new model with the APIs. And finally, the fintechs will need to integrate with the new APIs and the new security. What are the new entities that we are going to get into the PSD2? So we have the account servicing payment service provider, which is actually a bank. So these are the services which are servicing the user accounts. They service our credit accounts, our debit accounts, our loans. Some banks service our, let's say, investments, stock exchange, and whatever they do. They will need to transform and to conform to the new rules. They will need to provide the access. So every user will be master of his own data, and he will need to provide user consent for this access. We have the PISP, which is the payment initiating service provider. So this service provider, as it says, initiates payments on behalf of the user. It's like the Swish application. So they are going to go, and mobile pay, they are going to go into this class of service providers. One user can give and revoke consent of using his data and using his accounts to the provider, to the third party. And it opens up possibility for two-legged and one-legged transactions in EU and across the borders of EU. So it would be possible to actually get these APIs working for you into cross-border payments, not only within EU banks, but also with all of the banks which are working with EU banks. And the last one, we have the account information service provider, which is actually providing account details for the user accounts. These ones are actually the ones that, instead of scraping and getting inside your e-banking, will get that information for free. They will give you information about your credit card, about your debit card, loan. This information can be called by the third-party provider, by the application, something like budgeting tool, or let's say account controller or something like that. Yeah, they can also become AISPs. And what is the interest of the banks of becoming AISPs? Somebody comes into the bank and asks for a new loan. They want to know your credit history. Instead of you providing all the information, they could just ask for your consent and use that to actually get the information for you according to the PSD2 in the whole European Union, not only in this country, even for the non-residential accounts in other countries. He will give consent to use his data. Let's say he wants a loan, and this loan is part of some campaign, let's say 0% interest for the first 2 years. And in order to get it, you will need to provide backing documents about your accounts in different banks. Instead of going and collecting those documents, the customer will get the benefit of just giving one consent, and everything can be done not only in the branch, but it will be done online. So he doesn't need to go into the branch. He will go into the branch if depending on the country, it requires face-to-face meeting and physical signature. Yeah, every country has something like that. Not only EU, but also every, let's say, more developed country has these credit bureaus that work behind the scene, but they charge for that. So you can say that you will have no upfront payment, and even if they have some campaign management and they are covering that expenses right now, there will be no expenses to cover. So it's going to be cheaper for the banks and more need for the customers to go into one bank and finish everything without going to any other place. Yeah. Yeah, exactly. And they are going to cut off that by issuing themselves as AISPs. So this directive does not go only to banks. Let's say we have loan houses which do not have a banking license, but they offer loans and they give loans. And it is also needed for in the credit history in order for something to be approved. And even the loan houses right now will not require any data from the banks for your, let's say, monthly incomes. They will see it through this account information service provider. Big companies will use, if we go outside of the banks and credit houses, big companies will, not big companies, every company will gain a benefit of this. If they are expecting a payment, this software will automatically check, but based on some security standards, not with direct access screen scraping, that something that can be, if not secured properly, taken and misused in future. They can create software that automatically checks your account, and if you schedule a payment and you give consent, which must not be, it will depend on case to case by each country. You can give, it's let's say right now something like 1 month, but I think it's going to reduce to 2 weeks. That once given a consent, they can reuse it multiple times. It should not go like that, but again, we are thinking about customer first. It depends on the bank. The customer may give permission, the software, your device, your mobile phone, to pay your bills every month on a scheduled term and mark it as a secure payment, but it's up to the bank to say, okay, you are either this month your bills are higher and the software is transferring more money than usually. It depends on the analytics that the banks run in behind, or they can just simply say, okay, they bought some system without AI, and they can say, okay, you will need to give me consent on every transfer, not just to say that the user has given consent, I don't know how much days before. No, yeah, into PISP. They can also do debit. It's not only credit, but it's for debit. They will have to know the exact amount. It's a bit more work. Credit transfer is something that we will get across Europe. Debit transfer right now, I'm not sure if it is going to be by country, because it has some internal clearing, does not reserve the money the same thing as credit transfer does. So we already spoke a bit about this topic. What will banks need to do? What will payment service providers need to do? And we didn't mention the telecoms, but they are going to be restricted on how much money they are going to they can collect over phone sales, like dial a number and they will take it from your account. That's something that is going to be restricted by the PSD2 to only digital goods. So you buy some subscription or something like that, and for physical goods it will not apply. But they can also register as a PISP and continue work as they are working it currently. What banks can do, we also touched a bit of this story. They can just become compliant, open the APIs, and provide access to all other third-party providers. Or they can expose additional APIs which are not mandated by the PSD2, and they can monetize on that APIs. Which means they can provide additional services with the data that they hold and get paid for that. Something like using the bank ID right now from the third party provider side. They can also become a PISP and or AISP. We said why is good to become AISP. Why is good to become PISP right now? Only several banks in Europe or several countries have the peer-to-peer payment, and that peer-to-peer payment to be not only between customers of the same bank or the same branch of a bank in different countries, but they will be able to execute peer-to-peer payment from their, let's say, e-banking without doing a wire transfer or without adding any additional cost to the customer. And what is the coolest thing about it is that they already have the trust of the people. They are used the whole their lives to pay something through their banks, and they have the trust in the banks as entities, and that will be something that the third-party providers will need to compete against. So right now you have Swish. If something else comes out, you will have doubts about it because it's not something that you have used the same amount of time as you were using that. And there are also people that are still having doubts about Swish and would go to a e-banking solution. And there is even the most hardcore group that will go into the branch to finish something and to execute a transfer. Or the last thing, the most innovative banks are doing, combine all of this and offer new business to customer and business to business services. So we have the aggregation of data, AI services for financial advising, comparison portals. They can sell credit score data, like we have. The lady said we already have some institutions that sell those data, but even right now the banks can sell those data if and they can offer it into a lower price than the current nationwide institutions. Yeah, something like that. Yeah, but that's here. I think that in Denmark everything is going through mobile pay. They even offer some functionality that thing has. So it or budget management. They can see that you are, let's say, your credit card is low on a different bank, and you are constantly in delay. They can just buzz you with reminders that will ask you, would you like to cover those debts, and what will that mean on the long term? So it depends who is going to be smarter, and if they are going to invest in those new services. If they want to invest, they can actually gain a lot, close some markets that are not even open right now, and continue to have their monopoly. Or they can choose option one and just become servicing provider. Yeah, yeah, but if they offer the, let's say, the most out of the PSD2 products, they might be into a situation that somebody else is going to sell their good name. They're like, you have a mobile application with, let's say, thousands of functionalities, and 900 of those functionalities are only available in certain banks. The, the marketing of that application will actually push the customers towards those several banks instead of the ones which are only service providers. And what about the existing payment service providers? They will become compliant, or they will go out of business. So everybody, regardless of what he is doing right now in the finance sector in EU, will need to comply. There will be some trade-offs, like giving extra time for somebody who doesn't make a certain amount of turnover or transfers monthly. They will all need to stop with the direct access, which is currently still said it's going to be illegal as soon as the PSD2 is enrolled. And if they want to continue their business, they will need to go to the API access. They can expand EU-wide. So right now, as we said, the case is that they generally take a certain domain in a certain country, because in that country they have either banks that cooperate, or they have a single bank that cooperates and they can connect to that bank. That's actually Think's case, because they are closing a deal with the bank. They are not getting that for free, or let's say for a transparent sum. They are just doing contract in one country, and then they want to expand on the basis to actually create contracts with probably the biggest banks in EU. But in those negotiations, the bank might ask more than they are willing to actually cut from the share. With the PSD2, there will be no such, let's say, stoppage. They will just go there, get the APIs, read the documentation, apply the same thing in their communication channel, and that's it. They get it for free. And the last thing that they can do, if they are just doing one domain and they are doing two-leg transaction in EU, they can actually expand into one-leg transactions. So everybody who is in touch with PSD2 will also have to comply with the PSD2, and that will ease up the remittances and peer-to-peer payments cross-border, not only within Europe. One of the most interesting markets that, except for the EU, everybody is searching in Russia, in the USA, in China, how to, because they're, let's say, Europe is a huge market, they are getting money from there. They want to know how can they get that for free. They have a lot of transactions and they are giving a lot of money for wire transfers, or I don't know, Western Union. They want to get that for the least cost.